In this video, you will learn the best support and resistance trading strategy for synthetic indices. You will also learn how to draw support and resistance in the way that it truly works in the market. And I'll be teaching you the best way to trade this support and resistance line on synthetic indices so that you can be able to use it and make money in the market. Now, let's get to it. If many traders see this line that I've drawn in the market, they'll be like, is this support and resistors? Because they are not plenty. This is just three lines for a very wide market like this. Why do I choose to draw only three lines for this market? I'll tell you, and you're going to understand before the end of this video. Now, what are support and resistance lines? Support and resistance lines, they are lines that represent areas in the market where there have been strong price action in the market. So, for example, as traders that we are, we have a belief that what happened in the past is very much capable of repeating itself in the future. So when you are trading back to front. You're not trading front to back. It means that you are using past activities to predict future activities in the market. So meaning that when you see a market, for example, let's see here. When you see a market at this point on the chart, this point here, see where my arrow is. See at this point here, look at my cross. So look at where my cross is. At this point in the market, something is telling you that if this market gets to this level here, if the market gets to the level here, it is very much possible that we can see another trade. We can get another kind of movement at that exact level. Let's say, for example, you draw the support line here, this horizontal line. So you are expecting the strength of the market here to reflect at this point here. Now, let me give you an example of this. For example, you are a child, and when we were growing up, a lot of us were very stubborn. And I believe that a lot of you were very stubborn when you were small. Now, children used to play with a lot of things. There are some kids that like to play with fire when we were small. So you keep playing with fire until the day it burned you. So when you were playing with the fire, the elderly ones around, they say, please leave the fire, leave the fire, leave the fire. No, no, they play their fire. But you say no. You want to play with fire. You're a Superman. You want to play with fire. Then eventually, one day the fire burn you to the point that it leaves a mark on your body. Now, so for such person now, you don't need to advise that person when the person sees fire the next time. So each time the person sees fire, he or she will remember the scar that the fire gave to him or her. So if the child is very stubborn, no matter how stubborn he or she is, nobody likes fire, nobody likes to get hot. So he or she will remember that scar that he had, and the person will avoid the fire. The next time he sees fire, he will run away. He won't even get near to it. So that's the thing. For trading, it's almost the same thing. So when you see an area in the market where price have reacted very much, very well, that is the area that the market is going to return to. And each time the market returns to that point, there is a strange reaction that it will give to that at that point. So when the market gets to that point, you are expecting the market to give you a very strong reaction at that area. Because of this scenario that I'm explaining right now, we have a lot of trading strategies. We have trading strategies that concentrate on these zones that I'm telling you about. Strategies like supply and demand, um, liquidity, order block. All these strategies are following the same principle, but just different strategies. Let's say for a supply and demand, people can supply and demand traders can take this as supply and demand. Let me find this triangle button. Triangle. I mean rectangle, sorry. So let's get this rectangle here. If you draw this like this is supply. It's a supply zone. So it's the same thing because the market moved down aggressively from this point. Traders believe that if it gets back to that area, we can find a good trade. And as you can see, the market came down. So what am I saying? When you are trading the market, when you are trying to get support and resistance, these are zones in the market where price have reacted strongly, and then you now want to trade at those areas, those zones, so that you can also make money from the market. So it's very simple. Now, the problem now is that many traders like to draw their support and resistance at any point in the market. Some people like, if you open the chart of some traders, you would think that there was a war on the chart. Like there was maybe a have you ever seen a point where a place where chickens are looking for food? You see the way they scatter the ground before they eat. That's the way. That's how scattered the chart of many traders are. Now let me show you something. Look at this. Look at this line here. I have two lines on the chart right now. Many traders will draw line. They will draw line at any point in the market. They think they are trying to be smart. But the truth is that it does not work like that. They can draw a lot of lines on the chart, a lot of lines. And you'll be wondering, look at this. This is the way a lot of traders draw their support and resistance. Too much. There will be too much support and resistance on the chart. But that is not the right way to trade. So if you want to get a strong support and resistance on the line, you need to first of all delete all the bad ones that you have drawn before. Delete them. I have mistakenly deleted my very strong support, but I know where to draw it again. So now you delete all those ones that you have drawn. Then you pay attention to the chart. Like I said before, when you want to draw a support or a resistance line, you need to look back to an area where the market has reacted to very well before drawing it. We are here with volatility 50. So now, if I want to draw my support and resistance line, the main place that I will focus on a chart like this, around this zone, number one, I will draw it here. I'll draw it here. Why did I draw it here? Because first of all, the market touched this point. When the market touched this point too, there was strong reaction. There was reaction at the first place. There was also reaction at the second place. This third one, there was reaction. Now, when the market broke out of that point and now did this little retracement here, there was also a strong reaction. So we are looking at a potential support and resistance here. Now, if you check well, it still continued. So you can see the market showing reactions around this support and resistance line. So if I want to draw another support and resistance around this same area, the next place I'll draw it is here. I'll draw it at this point on the chart. Why? Because I have large price movement. You can notice that I'm not drawing it in a small price movement inside the support and resistance. I don't need that. So I draw it at areas in the market where it is very visible. And when you're drawing this support and resistance, don't zoom in like this. A lot of traders like to zoom in, then start drawing start drawing support and resistance. But for you, don't zoom in. Just zoom out. Make sure you have zoomed out to the last level. Then you can see the market clearly like an eagle. So you know exactly what is happening on the chart. So when you have done that, you can then look for trading strategies that you can trade with support and resistance. But the first thing you have to get it right. You have to first of all get it right. So now that is the only support and resistance line that we can get around that point. If you draw it here, if you draw something here, it is standing alone. So this one cannot count as a support or resistance line. So you delete it. Now we have the line, two line. All you need is two line to trade everything at this zone. If you know what you are doing. When the market has changed direction and the price have moved far from that former support and resistance, you start to draw new ones. Now, if you look at this, look at what I did here. See, so I drew my supports by looking at this zone and this zone, two of them. I can see this one that didn't get to the support and resistance, but it had a reaction. But this is the 2 point, this one and this one. Those are the 2 points in the market where I got my support and resistance, this particular line. So you can now draw your support and you can now look for trades when you get to this line again. You can see I have another one here. This one is connecting this one and this one together. So I know that each time the market return to that line, that particular line, there can be a reaction like it happened here. Look at, so if you take it from the old, from back to the past, you can be able to get the future movement. These are the lines that control the market. Now, there was a line that I mistakenly deleted, and that was this one. Correct. Let me get this big one so you see. Look at this line here. See, I took it from this place and this place. Remember, we are on the 15 minutes time frame. This place and this place. Now, look at what it did for me. It gave me an opportunity to get a trade at this point. And look at when the market got to this area. Look at the strength. It went down straight. That's the power of support and resistance. Now, for example, where are we going to draw our support and resistance on the chart? All right. First of all, we can draw it here. That's a strong zone. Judging from this point and this point. Let's say we met the market at this point, this area. Can draw this. The second place that we can draw is here, this point here. Because we are connecting two strong areas in the market. Here, look at all this movement here, and then this place. These are strong levels at this price point in the market. Now that you're done with that one. If you keep moving and you want to draw more support and resistance, you have to like understand where you are drawing your lines. So you can draw another line at this point. You see this point here? You can draw your line here and you will get strong trades in the future. See the price reaction at the support and resistance. Now on this chart, where can we draw our support and resistance? Alright. We can first of all draw it here. You can see that these levels you can see that all these levels are very strong in this zone. These are strong levels. So see the way it moved up. See the way it moved up from here too. That's the strength of the market. We can also draw our support and resistance at this point too. This are now strong area in this current market here. And another place that we can draw our support and resistance is at this point. So now we have three good support and resistance line at strategic areas in the market. So you see, these are strategic areas. All right, now let's see how we can use this support and resistance to trade. Let's see how we can trade with them. Well, well, first of all, let me delete all these lines. Delete them. So we can go back to this first one that I drew. We can use anyone, even the one that I've drawn. So let's have this one here. All right. So to trade with support and resistance, first of all, you need to understand how the price reacts to it. Sometimes you will see the market just move around the support and resistance, just inside the support and resistance. While sometimes you will see the market break out of the support and resistance. See, those are two ways that price can move around support and resistance. It's either they are moving inside the support and resistance or they break out. So now the movement inside the support and resistance is very, very profitable. But the one I like to trade the most is the movement outside the support and resistance. When there's a break, for example, at this point, look at this point here, look at this zone. So here the market broke out of this point, then it retraced back to the zone. Let's call it a zone because it can be a support, it can be a resistance, but that one does not matter. So we can call it a zone. The line just gives us the areas in the market where we should pay very good attention to. So now let's call this one the zone. So right now, when it retraces to this zone here, we start looking for good candlestick that we can trade. And one of the best candlestick for trading support and resistance is the pin bar. The pin bar. Pin bar is very great for trading support and resistance because not only will it show us the strength of the buyers or the sellers, but it gives us that perspective that there is a reaction, there is a strong reaction at that point, and that reaction made it to form a pin bar. So we are looking for pin bars when we are trading support and resistance. They work very well. And when you are trading this break and retrace, when it breaks and then retraces, it helps you to join the trend. Like for example, here you can see that the market was moving in an uptrend here before it broke the zone and then retraced to it. So when it retraced like this, you understand, you know that this market is following the trend and at the same time retraced into a very strong area on the chart. So this is a very strong area on the chart. So now when it retraces to that point there, you can now you can just observe and see if there will be a pin bar candle there. When you see a pin bar, then you know that you are in for a trade. And remember, when you're looking for pin bar on support and resistance, you're looking for pin bar that is moving to your direction. So right now, if you want to trade this strategy, if you want to trade this particular movement here, our goal is to buy. You understand? So we want to buy the market here. We want the market to go up. So any pin bar that we see here must be according to the color of the price movement to the top. So on my chart here, you can see that I use brown and blue to paint my chart. And why do I do this? Because I want to get a particular. So you can use any color you like for your chart. It does not matter as long as you can be able to use those colors to identify the bears and the bulls, the buyers and the sellers. So if you use red, if you like use green, if you like use black, you can use white and black, you can use orange and purple. In fact, you can use any color that you like, but the main thing that you should notice, the main thing you should pay attention is the is to be able to identify the color that is supporting the buyers and the color that is supporting the sellers. And at this point, you see that the color that is supporting the buyers here is the blue color. So you see that my pin bar is in a blue color. That means it is bullish. This is a bullish pin bar. So I can enter this trade here since I saw this bullish pin bar, which can give me a lot of profits. Now let's take a look at another example. Now pay attention to what the market is doing here. So right here, the market broke out of the zone. You can see it broke out of the zone. This could have been a good trade. This one here, this particular one here, because it broke out and retraced. But what candle did it give? It gave it a fat doji candle, which is not good. We can't trade this. But right here, look at here. When the market broke out of that zone again, it broke out to the upside. Now it retraced back to this zone. At this point, it didn't give us a pin bar for our movement, but instead it now went up and came back to that zone again, this particular zone here. And at this point, you can see a pin bar, a bullish pin bar. Look at the bullish pin bar. Look at this. It gave us a bullish pin bar. And with that bullish pin bar, we can now enter a trade. You understand? We can enter a trade because you have seen a bullish pin bar touching this zone. Remember, your pin bar must be touching this zone. If the pin bar is not touching this zone, then it's not going to work out. So your pin bar must be touching the zone. And from there, you start see the market going up. So it's very, very simple to trade with this support and resistance strategy. This strategy is very, very effective in the market. If you want to add more risk management to it, I will always advise you place your, let's say you bought here, so your stop loss be something like this. Don't mind the sell limit. You can place your sell limit here. You can place your buy. Let's say you enter a trade here. So your take profit target to be around this point. You understand? Around this area, the next high. And your stop loss should just be below the pin bar so that you can avoid losing your trade just in case the market goes bad. So you make sure that your stop loss is below the pin bar and your take profit is at the next high. You can go and try out the strategy on your chart. Look for them the same way I've taught you guys. It's very, very simple. I give trades in my VIP signal group. If you're interested in joining my VIP signal group, the link is in the description box below. There, I give high quality trades that we risk very little and make a lot of profit from the market with it. So if you want to join us in the VIP group, all you have to do is click on the link below. And if you are new to Deriv synthetic indices, you can sign up with Deriv broker there in the description box below. Sign up with Deriv broker in the description box below to get your account ready, and you can join us in the VIP signal group so that we can trade together and make money from the markets. All right, I'll see you guys in the next one.